first of all, let me thank the organizer for putting up this fantastic conference and inviting us to talk about central bank cryptocurrencies. This is going to be a joint presentation with Fabian Schär, who is standing here. And as you already mentioned, we are working for the University of Basel and the Center for Innovative Finance. We do a lot of research in this area, and if you have any research question that you think is interesting, please contact us. I have to say something. There's this disclosure statement. Yesterday, a couple of presenters presented their, what they hold in terms of cryptocurrencies. I have also to make a disclosure. I'm coming from the dark side, which means I have worked for central banks, and I'm consulting central banks. Okay, let's start this presentation here. Okay, this is joint work, as I said. So I'm going to talk about central bank money, private money, and also an idea that is called central bank electronic money for all. Then Fabian takes over. He really talks about central bank cryptocurrencies, and he's also making a reality check, basically telling you where central banks are right now. Let's get started. This is a refresher. Many people don't know it, but I think it's important to understand what is central bank money, and I'm going to present the central bank, the monetary system of Switzerland, but many other countries are very similar. In Switzerland, legal tender is banknote, coins, and reserves. Banknotes and coins is kind of an easy thing. This is just called cash. It's a physical object. Everybody has this in his pocket. Reserves is electronic money. It's basically a liability of the Swiss National Bank towards the holders, and there are in Switzerland about 200 financial institutions that have access to these reserves. And the main purpose of it is just settlement. And this is an electronic money, or basically a virtual money, which means it requires record keeping, and that's the difference to cash. Cash, nobody needs to keep records. Okay, how is central bank money created? It's actually very simple, but many people have, don't really understand it. At the end of the day, it's just through kind of so-called balance sheet extensions. There are two ways to do it. The Swiss National Bank, for example, can just buy assets. It bought a lot of euro assets lately. It buys the assets and gives basically the financial institutions reserves. So you see, at the asset side goes up, the liability side go up. That's why we call it a central bank balance sheet extension. Or it can provide a loan to a bank, and that's the same thing. It's also a balance sheet extension. And what you can see here in this next graph is basically this dramatic extension, explosion, of the monetary base in Switzerland. That's exactly through all this buying of these assets. The balance sheet of the Swiss National Bank also exploded. And by the way, roughly about 10,000% in about maybe 5 years. And of course, we know why. It's because of the financial crisis and the euro crisis later on. Let's talk about private money. Of course, there are many monies that kind of circulate in some way in the financial system that can be called money. But the biggest part by far is kind of sight deposits. That's basically the money that you hold at the bank. Now, sight deposits are also a liability. It's a liability of the bank, right? It's a promise to pay out legal tender. So you face counterparty risk if you bring your money to a bank. It's no legal tender, right? Many people think it's a legal tender. It's no legal tender. And it's also a virtual money, so somebody needs to keep the records. Now here is just this graph about the sight deposits. You see there is also some increase, but it's much less than actually the central bank money, the increase of the central bank money. Now you might ask yourself, how is private money created? Exactly the same way. The mechanics of producing money in the private sector is the same as at the central bank. It's also through these balance sheet extensions. I would like to talk about cash now. And I think the reason is also this conference is about Bitcoin. And everybody that has read, the white paper of Satoshi knows the basic idea was to bring cash to the internet. That was the initial idea of everything. What are the benefits of cash? One of the biggest benefits, in my view, it doesn't require any record keeping, which makes it very simple in some sense. It allows you for peer-to-peer transactions. There is immediate settlement. That is, there is no credit involved in a transaction, which means that there is no counterparty risk, there's no need for verification by third parties, and for that reason, actually, users can stay anonymous. So this is a property of cash, which I think is very nice. There's no double spending, except if you try to counterfeit coins and banknotes. And it's a permissionless system, which is another big advantage. In my view, not everybody agrees with me, not every central banker agrees with me. But I really think there's another real benefit of cash, and that you can see on the next slide. This is cash in circulation in Switzerland relative to GDP. And you see in the 80s how the cash in circulation decreased quite a bit. This is because of financial innovations. People started to use debit cards, they started to use credit cards. This is really fintech, what happens there. And then it was kind of quiet, it stayed about 7% throughout the financial crisis. And now you see at the financial crisis this peak, this increase, and then a further increase through the euro crisis. And for me, this is a clear indication of a property that cash has. It's, in my view, the only liquid asset that people can use to store wealth outside of the private financial system, because there is no counterparty risk if you hold cash. It's an insurance against the insolvency of financial system. And again, if you read the white paper of Satoshi, this was an argument, we should have this Bitcoin thing because of this property. Okay. I'm a big fan of cash. And by the way, I forgot to say something. I'm coming from the dark side, but I'm still a big fan of cryptocurrencies, right? Okay. Cash will disappear. And there are two reasons. There are political reasons. This is not my opinion, right? But people say, cash is kind of money laundering, tax evasion. And there is a third new argument about the zero lower bound. And the argument is as follows. If central bank would like to lower their interest rates into negative territory, people are going to substitute out into cash. And for that reason, actually, central bank can't lower the interest rate enough. So for that reason, some central banks, some economists, some politicians hate cash. And there is this book, The Curse of Cash, of Rogoff. I don't put it up because you should read it. It's really a bad book. Don't read it. But he is probably the most famous economist that is kind of fighting cash. Okay, the other thing I don't have to say, right? I mean, it seems to be so clear that one day, all these instruments are showing up, people are going to use it, they're going to pay with their phones, whatever, and they stop using cash. Now, this creates two problems. It's going to create problems for households and firms. If cash disappears, there will be no way that they can hold a legal tender. There is a legal tender law, but nobody can hold that. The reason is, of course, there's no cash and there is no access to these reserves by households and firms. The other thing, I think, that it's also creating problems for central banks. Now, for some countries, actually, seigniorage income, which is coming from cash, is actually quite a bit of, sizable. I think, by the way, if cash disappears one day, there will be also the demand for reserves might disappear. This is going to create problems for central bank policy, for monetary policy. So how do you want to conduct monetary policy if nobody holds your assets? Okay, so central banks are not stupid. That's why I work sometimes for them. So they actually talking about this. Even in the 90s, there were some papers about it, right? How do we proceed with monetary policy in a cashless society? Okay, and there are right now two proposals that address this problem. One is called Central Bank Electronic Money for All. I'm going to talk about that proposal. And then kind of central bank issuing their own cryptocurrencies. And Fabian is going to talk about this proposal. Let's look at the first proposal. It's really simple. It doesn't require any big change in the monetary system. The only thing that central bank needs to do is to allow households and firms to open accounts with them. It's like financial institutions have accounts with them. financial institution can use these reserves to settle. Now, if I'm a household, I have an account, I can use these funds to make payments. And then I have access to electronic legal tender. I think this is going to fulfill a genuine demand for a payment instrument issued by a trusted party where you face no counterparty risk, because the central bank cannot go illiquid. It's just impossible. It can't just print the money. Okay, there are many other advantages. I'm not going to talk about them. I'm going to give the presentation now to Fabian.
Thank you very much, Alex. Okay, so as you have heard, it would be really easy to just open up the accounts to the general public. And of course, this would be some form of electronic central bank money. But we could hardly call that a central bank cryptocurrency, right? Now, in order to understand what a central bank cryptocurrency would look like, we have to take a look at this cube right here. Any monetary asset can be defined in terms of 3 dimensions, in terms of its representation, in terms of money creation, and in terms of transaction handling. And if we start with cash as an example, cash, of course, is represented physically, right, by coins and notes. It is created monopolistically by a central institution, and it can be transferred in a decentralized way. Nobody can exclude you from using cash. If we go to Bitcoin, it's pretty similar. Of course, it's virtual. There is no such thing as an actual Bitcoin. It's created competitively, but what's important is it also has this decentralized way of transaction handling. And we believe that central bank cryptocurrencies should be right in the middle of these 2 assets. It's in fact a mix. They are virtual assets. They are created monopolistically like cash. But what they have in common with cash and with Bitcoin is that you can use it without any permission by anyone. And that's in fact the biggest difference to central bank reserves and to the proposal to just open up the accounts. With open accounts, central banks could still exclude you from participating, could freeze your funds. If you would have a central bank cryptocurrency, that wouldn't happen. Now, this was in fact really easy to be implemented. You could just use an open protocol, an open blockchain like the Ethereum blockchain. You could use an open token standard like ERC20. And then the central bank could go and say, you know what? We have this token and we guarantee convertibility at a fixed rate. Really simple. You would have all these advantages. You could use a stable currency in smart contracts. You could make use of scaling solutions like the Raiden network. You could use atomic swaps to even change it into other assets. And what I am personally most excited about, you could use it on decentralized exchanges. Just think about it, using Swissies, e-Swissies, on a decentralized exchange like Everdell. That would be amazing. Nevertheless, it's not going to happen, and there are many reasons why it is not going to happen. First of all, the regulatory risk. I mean, if you think about commercial banks and their electronic money, they have all these regulations, right? AML, KYC. Now imagine a central bank coming in and saying, you know what? It's great you guys play by the rules. We are not going to do that. It's probably not a great idea, and it's really a risk for their reputation. Then also they would limit their ability for monetary policy. And there are operational risks, something we tend to forget in this space. It's a really young technology blockchain. And even though there is a lot of research and really capable people working on it, it still is a young technology and a reputational risk for central banks. So what we think will happen is that there will be private players stepping in, private players offering a stable coin by depositing a collateral at a commercial bank, and then just trading this token, which is collateralized with the actual asset. Now, this statement is in sharp contrast to what you might have heard in the news, right? You always see these pictures of central bank buildings and flags and who is working on all these proposals. And there are many countries, in fact. There is Sweden as an example. Sweden, where cash is almost disappearing, where even homeless people in the street are accepting card payments. There is Israel, where an estimate of around 22% of GDP is the black market, and of course they're looking for alternatives to cash. And there is the famous proposal of Venezuela, and I'm not going to touch that, but they're also looking into it. The thing is, there usually is very limited information on any of these proposals. You usually get statements from central banks like, we consider doing something blockchain related, or we will introduce a cryptocurrency, but it's not actually anonymous nor decentralized, and the access may or may not be restricted. And then my favorite one, we will, never mind, I'll get out of here. And there's actually a good example of the last one. The Bank of England. They had all these hearings, they had all these proposals. It really looked promising. They even issued a report, a research report on the requirements for central bank cryptocurrencies back in September. Just a few days back, when we prepared the presentations, they dropped any plans, as they state, amid concerns about the impact on the traditional banking sector. But even if they stick to their original ideas, there's always the possibility that an outsider steps in and ruins the party. There's the case of Estonia. Estonia issued the S-Coin proposal in August. Then Mario Draghi heard about it, and he said, you know what, no member state can introduce its own currency. The currency of the Eurozone is the euro. And by then, everybody just thought, you know what, S-Coin is dead, the proposal is dead. Then Kaspar Korjus stepped up. He is the managing director of the e-residency project of Estonia. And he said, we are planning to launch S-Coin, and that's only the start. So keep an eye on this case. I have a feeling it's going to be really interesting. Here you can see a list of most of the projects that are out there, and it just shows you in terms of the dimensions what is going on, and if we could really categorize them as a cryptocurrency, as a central bank cryptocurrency. If you have a look at the first 3 projects, of course they are virtual, money creation is centralized, but decentralized transferability is really inexisting, and there are also permissioned ledgers. So what we're talking about in this case is really settlement. Then we have a really interesting project, the e-krona from Sweden. And they don't know yet how they want to implement it. There are different possibilities. They're talking about a centralized ledger. Of course, if they use a centralized ledger, it's not going to be decentralized by definition. But there also is a proposal for using a so-called stored value card. A stored value card is essentially a prepaid card where the value or the money is fixed, attached to the card. And if you would use something like that and you wouldn't rely on a ledger, then of course you would lose most of the advantages of a virtual money, right? So they can get either this one or the other one, but not both. S-Coin looks really promising, but as already mentioned, they have their issues. There is Mario Draghi, there is the European Union, so we will see how that turns out. Then we have 3 projects we don't really know a lot about. They didn't disclose too much information. What we know, though, is it's not going to be decentralized. And then there are 4 more projects where they don't say anything except, yeah, we are doing something in this space. So long story short, when you look at these projects, we really believe, even though it would be amazing to have a central bank cryptocurrency, and even though they are advertising it as central bank cryptocurrencies, that's not what will happen. Central bank will issue electronic money in order to not become irrelevant. That is going to happen, but we really think it's going through Proposal 1. They're just going to open up their accounts to the general public. They're giving out the opportunity to hold legal tender in an account in their ledger. And if they call it a cryptocurrency, that might in fact happen. It's just a marketing gag. What we really believe is that central bank electronic money will become a great competitor to cryptocurrencies. And what I'm saying next is really important. We are not talking about the asset class cryptocurrencies. Of course, if you're looking for the volatility, if you're looking for the opportunities in this asset class, then you're not going to hold a eSwissy, right? I mean, it's something completely different. But in terms of payments, where people are looking for stable currencies, when they just want to go to a coffee shop, it might become a reasonable competitor. And the last thing, we really believe that central bank money, the way central bank acts, and regulation will become a main issue in 2018 for cryptocurrencies. And that is in fact the perfect segue to the next speak, because I think we're going to hear more about regulation. Thank you very much. Have a great day.